recording this video Sunday 14th of July 2013, and happy Bastille Day to all the French subscribers of Emini-Watch. There are a couple of you out there. I'm going to do a couple of things in this video. I haven't put anything up on the site since Monday, and I've got a very good question I want to respond to from Sheila J first, and then I want to talk about in the second part of this video just where we're at in terms of the market. But I want to do the response to this question first, so it's at the beginning of the video, because I think it'll be useful kind of for future reference. So here's the email from Sheila, got this week. Hi Barry, thanks for the great indicators. I have a few setups that I trade each day and I'm now making a good living at it. Excellent. I have a quick question if you have time and inclination to explain to me. Do not feel you have to take any time if you're not inclined. Curiosity has just piqued. I use both the @ES and the @ES.D charts on each day. So @ES is day and night session. That's TradeStation kind of speak for the E-mini, day and night, continuous contract. @ES.D is the day session only, again continuous contract. They occasionally give different signals. I'm not sure exactly why. I tend to use the @ES on volatile days, @ESD on days when the volatility is low, but they're both side by side, which always allows me to see both at the same time. Thanks, Sheila J. So great little question, and I'm going to show you 2 days during this week where we have kind of different circumstances, and it'll show you how the better indicators are kind of calculating during those different periods on an @ES and @ES.D chart. So my favorite 1500 tip bar chart, which I find the kind of most trusty and handy one to take signals on. On the left hand side we got the @ES.D, so this is day session only, and this one on the right hand side is continuous contract, day and night. Now this is for Tuesdays and Wednesdays kind of open, and I'm going to show you what happened. So we had a little bit of a gap up Monday into Tuesday of about 10 points, and you can see on the @ES.D that's the open, the close of the previous day on the Monday, and there's our 10-point little kind of gap up. Same time period, but on the continuous contract showing that night session, you can see this is the close on the Monday and this is the open on the Tuesday, and that's what the extra information that you'll get by looking at a continuous contract day and night session. Now one of the reasons why I use tick bars is it compresses all of that information into a reasonable kind of chart. If you're using a minute chart and during the day you're using say a 5-minute chart during the day, there would be virtually no activity kind of happening. It would look very odd on a 5-minute chart, that overnight activity. But when you compress it on a tip bar chart, it makes far more sense. That's one of the reasons why I like kind of tip bars. But what you're missing out on is the extra information that'll come kind of pre-open and the recalibration time that it takes for the indicators to recalibrate with the new opening data. So as an example here, what you can see on the continuous contract coming into that day's session, we had a pullback to end of trend sequence where we had all of these blue professional bars after the open. Now I can't remember on Tuesday's pre-open whether we had a data release there, but often the data releases are happening an hour before the real open of the market, and the information we're getting during that data release is actually very important. So you can see here coming into that open we had all these blue professional bars at a pullback to end of trend signal. We'd had the exhaustion kind of signal or a pop getting us through into that trending sequence. We'd put in bearish divergence, Rambo patterns up at the top here, the amateurs kind of getting wrong-footed at the highs, and then the professionals kind of come in pre-open, and then we start to decline almost after the open. After the first bar of the open we're into a little bit of a down move there. So if you didn't have that data on your chart, this is what it looks like. So on the day session only, all we saw at the beginning of the day, at the end of the previous day on the Monday, was a whole bunch of blue professional bars getting out of positions at the end of the day, as they tend to do, and then the indicators just don't, particularly Pro-Am doesn't have time to recalibrate. So it's a dynamic indicator, so it's using some back history in order to figure out professional and amateur activity, and it's worked off all of this data here on the previous day. So we're not seeing a whole bunch of blue professional bars at the high on the open here because it's not had time to recalibrate. In fact, the first blue professional bar we see at the highs is at the pullback to end of trend, and then we start to kind of decline from that. But we missed all of this information kind of pre-open that said there's actually quite a lot of profit taking going on by the professionals there. So on this particular day you've missed out that kind of pre-open data. You've not got that in the picture. it's not allowed you to take any trades as well during that kind of sequence. In this, we've got a pullback to end of trend, blue professional down bar into here, so you could have taken a trade kind of pre-open into that end of trend sequence. That's kind of one opportunity too. And the indicators are just taking some time to recalibrate, so you're missing a whole bunch of information at the beginning of that day. So that was Tuesday, Monday into Tuesday. Let's look at the next day, where we get kind of close to open. Now, on the next day, Tuesday into Wednesday, actually the close and open were very close together, and so it looked like we were just kind of moving from one day to the next. It was almost kind of continuous here. But when we look at this using the day and night session, where we can see actually what happened overnight, this is actually what happened overnight. We had quite a little bit of range, kind of top to bottom, about 7 points top to bottom here, whereas we didn't look like we had anything here. Now, what's interesting pre-open here was all these dips. So the dip back into 42 was blue professional bars and it held. We had another spike down, blue professional bar, comes in at lows, we hold. Another blue professional bar on a little bit of a dip, we kind of break back above that. And so you can see that there's an inherent strength at this 42 type level where the professionals are kind of buying those little dips. Now, we go for a little bit of a runaway move, just a couple of points to the upside after the open, and then we slink off. But what's important after that move, we come back down to this 42 level after we kind of come down here on Wednesday, and this 42 level gets tested again and again. Down here we've got a bullish divergence, another bullish divergence signal kind of comes in, blue professional bars at that low, and because we know pre-open that 42 level was really important because we held it and we had blue professional spike down bars into that lows and they kept on holding. When we retest back down into 42, it's not a surprise on the Wednesday that it starts to generate a breakout move here. Whereas if we look at the day session only, we don't have any information to say that that's an important kind of low in the market that's going to potentially cause a reversal. So the last thing we see was a whole bunch of blue professional bars, professionals exiting at the end of the day on the end of Tuesday, and then when we come into those lows, yes, we kind of hold, we do have exhaustion, bullish divergence and so on, but it was an extra piece of information that we're kind of missing, that we would have seen in the overnight session that level was important. We tested it again, that we've totally missed on this just day session only data. So to summarize, what I think is important about having the day and the night session here is it allows the indicators to recalibrate more quickly after the open, because they've got more information to go on during the overnight session rather than just working off the close. And remember, working off the close, particularly with Pro-Am, you've got a lot of professional activity just closing out positions at the end of the day, and that tends to delay the recalibration of better Pro-Am, particularly after the open. Then you're missing some important data in terms of support and resistance levels, and then there are often opportunities, particularly with kind of data releases kind of pre-open, to take little trades kind of pre the open, kind of get ready for a couple of 2 or 3 point kind of trades pre-open when they set up with the right kind of better indicator characteristics. So there we go, Sheila, hope that was useful to you. I would kind of stick, if you have a choice between the @es.d and the @es, I'd always stick with the ES. It's going to give you just a better read on what is going on. So there we go, that's the little answer to that question I wanted to get out of this video first. And then let's just talk really quickly for the last couple of minutes just about what's going on last week. Apologies, no videos last week. I found it a really tricky week to trade, and partly, if you look at the week's activity the last 5 days on the day session only data, it's a matter of range and volume. And I need some kind of decent range to kind of pick off my trades, and there was just none last week. If you look at the ranges of the day, Monday through Friday, I think it was 8, 10, 11, 11, and 7. And so 3 of the 5 days were kind of 10 points or sub 10 points, and I think 10 point, sub 10 point days really tricky to trade. And then the volume that was traded was extremely light here. Friday was particularly slow. We only had 0.9 million contracts traded on Friday, and it was just like treacle. So the best opportunity was actually, the Ben Bernanke's speech, which gave us a 20-point kind of gap move, and he did that speech after the close. And there was some criticism as whether he should have done that during the during the day session, during the full liquidity of the day. And I think that's kind of justified. It's very thin trading in the overnight sessions, and I think a lot of people were annoyed that they didn't get the opportunity you'd have had better fills during that kind of day session rather than the overnight session. So I think that's kind of a justifiable kind of criticism. But anyway, as I said, I was waiting for the FOMC. Tuesday was a bit of a write-off for me because the FOMC notes are coming out late in the day. I'm to my bed by then because of the trading hours that I've got here in Sydney. And then the big move happened after the close, and I wasn't awake for that. And then these other days were just small ranges and tight ranges and small volumes, so really tricky. So not a good week for me. Hope you traded it better. We did have a nice little setup in crude, and I've got some very nice emails from people saying they made good money on the breakout trade in crude, so well done on that one. In terms of where we are now, sometimes I think I come across as a real perma bear, and no doubt, yes, I am a total perma bear. I'm no denying that. But sometimes I think people think I just short the market, and when it goes up, I get really angry and annoyed. And my best trade during the week was actually a long trade. So I'm concerned about the overall direction of the market. But in the small kind of time frames, taking trades doesn't really impact me. I'm quite as happy to go long as to go short. But what's kind of setting up at the moment is kind of interesting. I just want to draw your attention to it because if it worked out, it would be a sweet signal. So just let's look at this just quickly. So this is at ES, so continuous contract, and what we had a breakdown. We had this exhaustion pattern into the 1680s last time, and then bearish divergence kind of came in at this top here, and we've slunk off ever since. We had exhaustion selling on the downside, which showed the amount of selling, the extreme kind of selling that we had, and we bounced from there. And I said as soon as we got through the support level, we had to wait until the resistance level, the resistance cyclical turn kind of comes in. Now this shows that there's weakness in the market, that we've gone through a support level. Remember, in uptrends, the market will just bounce straight off support level and will never look back, and we'll just keep on going. We tend to overshoot on the upside. We overshoot the resistance levels. On the downtrend, it's the reverse. We overshoot the support levels and we just bounce straight off the resistance levels. Okay. The first sign of weakness of a change in trend is that we get a break like this. We've actually broken support. Last time we had cyclical support was also a pullback level. We've had a double pattern here. This one came in late and we bounced straight off it and never looked back. So this was just showing the strength of the market here. But subsequently what we've had is exhaustion buying, bearish divergence, and when we broke through the support, it just shows the strength, it shows the weakness in the market. Now, if we just bounced off the support and support becomes resistance and we just continued, kissed this level and just continued on down, okay, game over, we're straight into a downtrend. But we didn't. We did the reverse. We kind of, the support level, we broke through it, came back up. As soon as we're doing that, we've got to wait until the next resistance level kind of comes in before getting kind of any kind of bearish view on the market. But what we've had on Friday's trade is a Rambo pattern at the highs. We've got cyclical resistance due on this daily time frame, which I think is going to print on Monday, so that'll be a dirty end of trend signal up here. And when you look at the momentum signals, this is we need a couple of days for confirmation, but this is probably going to be a flush pattern. So what that's showing to me is we've had our exhaustion buying, bearish divergence, we've come back up, weak pattern with Rambo, amateurs right at the top of the market here, and a flush pattern kind of coming out. So as a potential turning point, it's looking really interesting. I mean, that's I don't want to, people think that just because I've put up the stock market crash warning indicator that I think, the market's going to crash imminently and all these kind of things. Just remember, with the crash warning indicator, there's an average wait of 6 weeks between the signal going off and the market top being put in. Getting a lot of, not a lot of pushback, but I'm getting some people saying, look, this thing's going through 1700, and it's going to go mid 1700s and kind of keep going. That's, yeah, you could be right, but I'm just looking at this and saying, just look out, because it's a Rambo pattern, cyclical resistance. We've shown the weakness in the market kind of going forward. I think we're going to go through some kind of choppy trade for the next few weeks. I don't think it's going to just power on through. I mean, if we look back at the volume here, it's incredibly weak. There's no demand happening at these highs. So, and then we've got Bernanke speaking again this week. He's got he's on the Hill kind of answering questions. We know he's retiring. We don't know who's coming in. We know there's dissent in the Fed as to which way to go. And I think the worst thing for the the market would be some uncertainty as to who's going to take charge and what the position of the the new Fed chairman is going to be. So anyway, just putting it out there. Take the trades long and short as they kind of set up, but it's just interesting. We'll know by the end of the week kind of how this one kind of turned out, and I think that testimony on Wednesday is going to be kind of key. So anyway, hopefully be a better week's trading this week. Hope you're trading well. If you got on board the crude trade, well done. And I'll try and put up some more videos this week.